Welcome everyone to this Bitcoin course. This Bitcoin course is designed to help you gain an understanding if you are an asset owner, if you have real estate, stocks, bonds, etc., etc. If you have assets currently in your life, this is designed to help you get from not knowing anything about Bitcoin to helping you understand how to actually add Bitcoin to your portfolio and why it's essential to do that, in my opinion. This course is not really designed for the super tech people. This is not designed for people who don't have assets to invest, although I'm pretty sure both of those categories will benefit in consuming this course. But this course is really designed to help people understand who have assets, who have spent the last 20, 30, 40 years building a legacy, why you must add Bitcoin to your portfolio at any percentage in order to ensure the continuing value that you have accrued. So my name is British HODL. You can find me on Twitter. You can find me on all the different social networks and see the content on YouTube. And I want to walk through a few things about Bitcoin. And this is going to be as comprehensive as I deem necessary. And then I will point you to certain resources that can dig into some of the stuff that's more tech related. My background is more investment and finance related. So the tech related stuff, I'm not even going to claim to have the expertise on that. What I do understand, however, is why I needed Bitcoin in my portfolio, and I understand why my parents, who have spent 35 years building their real estate portfolio, needed Bitcoin in their portfolio, and I understand why you, if you own real estate, stocks, bonds, etc., etc., need Bitcoin in your portfolio. So that's where we're gonna start off. And really, the first thing I want to discuss in this first segment of this course is why you should have Bitcoin and why you should be considering it. I would, a lot of people want to talk about the technicalities of Bitcoin, but I really want you to grasp why Bitcoin is very important for your portfolio, especially if you have assets that you have been accruing and you have a legacy that you have been building. At the end of the day, if you have a legacy that you've been building, the main thing you want to make sure of is that the value of that legacy is protected. And Bitcoin can help do that, but you need to actually take action to add it to the portfolio. Otherwise, the value will be slipping away. Now, a lot of the people that I work with, have worked with, my background has been investing. I started off in real estate when I was 16 years old, helping my dad's business negotiate property deals with new build developments. We specialize basically in helping people buy properties with no money down in London, and then moved on to the stock market, and then gold. And I was in gold for a significant amount of time. And then in 2020, my eyes were opened regarding Bitcoin. In fact, I thought Bitcoin was a complete scam in 2017 and really up to 2020. The first time I actually bought Bitcoin was in 2017, sitting with a friend of mine smoking a beautiful cigar, and both of us basically bought a few thousand pounds worth of Bitcoin and then sold it a week later because the price had doubled. And we thought, well, we've made a great return here. This is fantastic. So that's really been my understanding up until 2020. In 2020, I had a significant amount of my net worth in gold and, of course, stocks and things like that. Again, I understand that once you have a reasonable amount of assets, I was a millionaire before I came to Bitcoin. I've not made my money through Bitcoin. I've had businesses and different projects since I was very young, and been involved in different investments since I was very young. So, the thing that brought me to Bitcoin was walking around a park during the lockdowns in London, and a friend of mine who I finally, friends that I respected, because the problem was that a lot of nerds and et cetera, were talking about Bitcoin. And it's like, well, I don't really know about any of this child's play, et cetera. And of course, I should have listened, but I didn't. And then in 2020, a friend of mine who I really respected told me to listen to a book called The Bitcoin Standard, and I highly recommend everyone read that book by Saifuddin Amus. And in that, there was a moment where he starts talking about the idea of stock to flow. And stock to flow is something, it's a metric that we use in the gold space, basically measuring the value and the hardness of an asset based on its continuing available flow or continuous supply and the amount of on-ground supply of that asset that there is. So basically, the more years that it takes to replace the current on-ground supply, the harder the asset is. So that was really what opened my eyes into Bitcoin, because I realized, wow, this is an asset that has a finite supply cap and eventually will have an infinite, what's called a stock to flow ratio. And literally the within the next 30 minutes of me hearing that, I stopped, rewound it, heard it again, and on my walk from the park to my home in London, I'd already opened up my Coinbase account that I'd used back in 2017 and bought Bitcoin. It was that of a lightning bolt moment for me to realize that this is the most finite asset on earth. But why is that even important? Why is you know the fact that something is finite even important? And I believe that is the most important question to answer. Why is the scarcity of something important, especially for people who have been in real estate, stocks, and everything else? Again, my background comes from real estate, my background comes from stocks, and my background comes from gold. And one of the things that I realized was that none of those assets are actually scarce. They're scarce because we lobby and we provide, benefits for people to make them scarce. For example, if we make it more expensive to mine gold, people will mine less gold. We can do that easily with regulations, etc., etc. If we make it more, if we hand out less permits to build property, suddenly we can manipulate the supplies, or we can hand out more permits like they're doing now in 2023, because property prices have moved ahead of people, so they're now handing out more permits for building. So all of the assets that we know of as investors are artificially manipulated on the supply and demand scale for us. And it's very important to understand that that's not a good position to be in, because you are at the behest of a government, of an overlord, to actually decide what your wealth level should be. Now, those people that have been in real estate, have been in stocks, etc., you've done really well. Why? Because when money is artificially created through thin air, and we'll go over a little bit of the history of money in the next segment. When money is artificially created, it's always looking for a home. And when an unlimited supply is created, it's looking for a cup that has a finite space to hold its value, and to give it its value, really. So, one of the things I thought of was, well, if all of this money has been created and real estate's been a great investment and the stock market's been a great investment, you know, what is the real enemy for me? And I was always told that, especially in the gold space, right? You're always told the conversation is the real enemy is inflation, the real enemy is inflation, the real enemy is inflation. And so I started to dig into that, because all of the people that I know that own multiple, lots of real estate, lots of stocks, lots of gold, seem to just get slightly poorer, but not in dollar terms, in actual ability to acquire stuff terms. Because that's what it is, right? Inflation is truly a vector, as Michael Saylor has said, based on the type of life that you want to live. If the type of life that you want to live is a life of, Domino's Pizza and video games, well, then your inflation rate is pretty low. But if the type of life that you want to live is fine cigars, traveling around the world and being able to control your own destiny, buy a home for your family, etc., etc., well, then your inflation rate has been significantly higher. Cuban cigars have done a better job at, protecting against the true enemy than a lot of different asset classes because of the scarcity of them. So, what is the true enemy? The true enemy is actually debasement. It is the amount of dollars that are printed, the direct amount of dollars that are printed. I remember speaking to a client in 2021, end of 21, and he said his team at his asset managers at Morgan Stanley had managed to generate him a 30% return since COVID started. And I remember telling him, like, you've just stood still, if not gone backwards, because the United States dollar has expanded by more than 30% in terms of actual debasement since the beginning of COVID, right? And that's a real, it's a real mind fuck to get yourself over. You really need to think about that quite a lot. The United States dollar has expanded by more than 40% since COVID started. So what that means is if your net worth didn't grow by at least 40%, you're basically standing still in the overall game of things. At the end of the day, inflation can be, the price of something is whatever, but if you really want to think about how much is my wealth worth, is my wealth actually growing, what that means is if the total amount of currency available in the world is $1,000, right? Let's just assume it's $1,000 in the whole entire economy. It's $1,000, and you control 10 of those dollars. And tomorrow the supply of that increases to 2,000, so it doubles. But you only now control 12 of those dollars. You might see that as a good return and say, I've increased my net worth by 20%. But really, you should own 20 of those dollars because the money supply doubled. So that to me is the real enemy. The real enemy is the expansion and the debasement of the US dollar, not inflation, not anything else. So I basically went back and I thought, well, the stock market's done well for me, real estate's done well for me, gold has done decent. How have these fared against the amount of money that's been printed? And I want to show you these charts to understand, because you're probably sitting there in these assets, and this may be shocking. It certainly was shocking for my parents when I presented it to them, and shocking for the friends around me. But I want to bring up this chart, and this chart is of the S&P 500, but it's valued in debasement. It's not valued in dollars. It's valued in the amount of money that's been printed. So it's valued in M2. And as you can see, the high based on the value of the S&P and debasement, the high was in January of 2000. That's when the true high was. And then since then, the market has come down. And in 2008, it tried to do this amazing pump. And then we had 2008, and that collapsed, and then it's been working its way up. At this point, by the time COVID hit, we had just about managed to make a new high since 2008, and that's not even the new high since the 2000s, in terms of the value that the S&P actually had against the amount of money that was printed. So what this chart shows me, and should show you, is that the entire millennium, right? This entire millennium since 2000, all of the gains that we've seen, just to show you the comparison, this is the chart of the S&P in dollar terms, right? And this is where it starts. So in dollar terms, we've had all these gains, but in debasement terms, we've basically not had anything. There's no actual gains going on. So any gains that have been had in dollar terms have been completely illusionary in real terms. There's been zero gain to your wealth as a percentage of the overall money supply if you've been holding the S&P 500 this millennium. So then I thought, okay, well, but the NASDAQ does a lot better than that, right? Surely the NASDAQ, tech stocks have done really well, et cetera, et cetera. Well, this is the NASDAQ. NASDAQ's definitely outperformed the S&P, but we're still nowhere near the previous high of 2000. NASDAQ has failed to capture this value. All of the gains since the millennium have been completely illusionary. We've printed all this money just to give us an illusion of making progress. So yes, people have been handed dollars, but value has been taken. And that's quite concerning to think about. Because if you own these assets and you own the Nasdaq, just like I did, the question you have to ask yourself is, am I happy with more dollars while I'm leaking my net worth? Because that's exactly what's going on here. So then I thought, well, everyone says gold is the one. Gold beats inflation, etc., etc. So this is the chart of gold against M2. If you own gold in your portfolio, this is literally the chart of gold against the amount of money that's been printed. And you're going to be shocked, because I need to actually bring this down to a monthly chart to actually show you. Because the highest value of gold against the amount of money that was being printed was in 1980. Right? Gold has not made a new high since 1980 against the amount of dollars that are being printed. It is scary to think that, the only way that people think that gold is going to become this asset that they project it to be is based on it just being repriced one day by humans. This is not an effective wealth building strategy. In fact, it's continuing to collapse, including silver as well. Silver has lost 95.99% of its value from the peak of its value in 1980. And then I thought, what about real estate? And the easiest way I could measure real estate on TradingView was just look at the VNQ ETF, which is a real estate investment trust. We're almost hitting the 2008 lows in terms of value of real estate versus the amount of money that's been printed. If you wanted a true value on your real estate, just take your property portfolio and increase its value by 80%. That's approximately where you need to be in order to just get back to the high of 2007, 2006 to 2008. Your money has been your wealth has been taken while you've been given dollars to give you the comfort that you are getting quote unquote richer. This is a complete and utter scam. And this is going to be something that, people have to think about. You have to take heed to what I'm saying here. Think about, certainly I did, and very quickly started moving my wealth more and more into Bitcoin and reorganizing my businesses to do the same, and telling all of my clients that this is what I've done. Certainly in 2020, I sold all of my gold because it doesn't make sense to own this anymore. You have to understand that if you're presented with new information, you have to take action for that new information. Now, is this tough? Absolutely. Is this, sound crazy? Absolutely. Why? Because people have spent 35 years, like my parents, 35 years building a property portfolio thinking that that's going to give them the value for their future, not realizing that any of these governments can say, okay, we're going to allow the we're going to allow the building of more and more real estate to control the value of real estate. And that's not really what you want to be invested in. Wealth is like, wealth is an energy, right? And if wealth is an energy, all these other things are like batteries, because you are going and earning your energy through a job. You're bringing that energy in. You're then relying on one of these batteries, whether it's the S&P, gold, real estate, NASDAQ, whatever, to hold that energy for the future. And what this is showing you is that the capacity of the battery keeps getting increased while you don't keep getting a boost in energy. That's a concerning problem, because if you are not able to control the capacity of the battery, well, then someone else is able to just come in. If you've got a liter capacity in a battery, just for example, if you've got a liter water bottle that's full, and someone just goes, nah, we don't like this water bottle, we're going to increase it to 3 liters, but you only have a liter of water in there, you're now only a third full. That's pretty much what's been going on with the amount of wealth that you own. So, this is why we needed something different. We needed something new. We needed something different. And this is the problem that's truly facing investors all around the world. This is not new. This is everyone has this issue. Everyone is in pursuit of the best battery. Whether you are an investor that's private, whether you are a sovereign wealth fund, whether you are a hedge fund, whether you are a corporation, whatever, you are looking for a battery that works for you to protect your wealth. This is why something new was needed. And then this is when Bitcoin was created. Bitcoin was created in response to this issue. So to really understand, this issue, we have to talk about the history of money, because what is money? If money is just an energy, well then, you know, what are the different types of batteries that have been created, right? Well, when we discuss the history of money, people think it starts with the US dollar. It doesn't, right? It doesn't start with the US dollar. Money, in fact, to start with, was barter. It's simple barter. It's basically saying that I have this cigar that I've made, and you have some milk that I want for my family. How about I exchange this cigar for your pint of milk? And that is the barter system. That's very, very simple, but it's based on whether you can create value that other people want. It's the basis of capitalism to a certain extent, right? Now, the limitations of the barter system are very, very obvious, because what if you don't value this cigar the same as someone else? And what if I only get to meet that someone else, right? So the lack of a common measure of value, and also, what if you value this cigar at a pint of milk, but I only want half a pint? I can't just cut the cigar. I have to accept the whole pint. So there's a lack of divisibility. And also, what if I don't know how to store this cigar? So therefore, I'm going to ruin this cigar. Or what if I don't know how to store the milk you give me? I'm going to ruin the milk. So there's all of these issues with the barter system, and it's much more of a short-term thing and on a smaller scale thing. So then next, what was introduced was money backed by commodity, right? So commodities such as gold, silver, salt, seashells, all this other stupid shit was created, right? And commodity money came around. Commodity money has its own limitations, because if every unit of you know, gold has the same issues. Like if I have a brick of gold and I only want to spend 50% of it, what do? And now I need to go and chop that brick into two, etc., etc., right? So all of these issues led to, from commodity money to minted coins, right? Minted coins were standardized by rule of law. They were verifiable because there was a one centralized authority. And it was also convenient at that point, because you have minted coins. I can trust that if you have this coin, then I can believe in the value that that coin has, right? And then minted coins really became the first widespread implementation of what we now know as physical currency. Okay, and then after minted coins, we went over to paper money, right? At the end of the day, it was tough to carry around all these coins of gold and things like that, and then so we decided to basically, instead of carrying those coins around, we'll issue paper to represent those coins. They were issued as promissory notes, and then every piece of paper is backed by a certain amount of gold that's held in a vault. Right? So in the gold standard, every unit of currency was backed by a certain amount of gold, right? And the advantage of that, which is the closest thing we've ever gotten, the advantage of that is that the amount of paper that you can create is limited by the amount of gold that you have in the vault. That's a good thing, because it means that you can't just get 12 people sitting around a table saying, oh, we're going to print 40% of the supply, because we can't. We need the gold sitting there in order to access and allow this paper. And then, of course, we abandoned the gold standard, in the 20th century, and then we got the we got the paper money standard, the fiat standard, right? And this is also a problem because the fiat money standard that we have right now is an unlimited money system, right? This is a fiat money is basically a currency that is not backed by a physical commodity, but by the trust and confidence in the government. I don't know about you. I don't have much trust and confidence in the government. The advantage of fiat money is that it can be centrally controlled. The government can issue or destroy certain amounts of currency based on certain policies to dictate how the economy and how that value of that fiat money is perceived within the economy. The advantages and disadvantages also include the idea of inflation, because if I can just print as much money as I need, I'm now going to create more circulating supply of that money, and then prices start to go up. So then we started having these boom and bust cycles because fiat money doesn't allow for the control. Again, you need something that is not reliant on human beings, because if human beings have a control over fiat money or over anything else, we will maximize it. There will be someone that tries to maximize it, and then it always blows up, right? And then, of course, we went from fiat money, which was true cash, just made out of thin air and handed out by the government. It's basically a centrally planned economy, to digital money, right? And everyone thinks digital money only came around once Bitcoin sort of came around, and that's not true. Digital transactions were happening for forever before Bitcoin came around. You have online banking, you got credit cards, etc., etc. And so now this started increasing the speed at which money is moving around the economy, and it did better. It's why we have the world that we have today, because more of this money was moving around and actually getting to work. It increases the GDP of an economy. So then you needed a digital currency that could move around the world at the speed of thought, and it had to be decentralized. Why? Because in 2008, as we saw, they pressed one button and created $1 trillion, right? And if you weren't getting the value of that $1 trillion, you're getting screwed over. The average person got completely screwed over in 2008 and then again in 2020. If you had assets, you did really well. Why? Because as this fiat money is created, this free, unbacked money is created, the people that are smart enough go and buy assets with it. Why? Because they want it to hold its value. It's like air has unlimited value until I put it into a cup and seal it. Right? The cup defines the value of the air inside of it. So that's what happened. We needed that. We needed that for such a long time. And eventually, Bitcoin was created as a solution to that. Bitcoin was created as a solution to that because we cannot live and exist in an environment where a handful of people can dictate the financial policy for everyone in the world. We cannot live in an environment where a handful of people in the world say, okay, the property prices in London, for example, have to go down. What do you mean? My wealth is attached to that. I can't let somebody else have that security over my wealth. There has to be something better. Human beings have always had the desire for something better, and we always go through these cycles. It was gold before, then it went to gold-backed fiat currency, then fiat currency, and then now we're back to an environment where there is something that works for the digital age that we're in. Gold is fine, but it doesn't work for the digital age, whereas Bitcoin works for the digital age. So then Bitcoin was created. So how do we think about what Bitcoin is and how was it even created. What was the solution that was generated for Bitcoin, and that's why we move over to part two.